Happy Thursday, y'all. Let's go. Interest rates continue to improve this week with top qualified buyers at 6.45%. Lowest rate still since last October and still opportunities to refi. Today's improvements being linked to higher than expected initial jobless claims. However, it really wasn't anything abnormal. Or it could have been lower than expected ADP employment numbers, although that's also not outside of normal. The big thing is there's a huge jobs report tomorrow that could be a real big market mover. PCE Inflation report came out last week. Inflation is moving in the wrong direction with core PCE increasing to 2.88 annualized, which is higher than inflation was last year. This is being driven by services, which is a difficult sector to tamp down. But even more surprising is that we're seeing decreased inflation in goods, which should be affected by tariffs. One argument to explain this is that many corporate profit margins are so high right now they'll have to absorb the tariffs because consumers are just tapped out. However, ChatGPT sourced some estimates that consumers are absorbing 22 to 40% of these tariffs. However, for now, the market is optimistic about a Fed rate cut this month with Wall Street pricing in a 97% chance. It's important to remember that last time the Fed cut by 1% total, mortgage rates actually went up 1%, although really just returning back to levels before the Fed cut. This is because mortgage rates tend to trend with the 10-year inflation expectations more than the Fed rate. What does this mean for you? For rate improvement, we basically need a bad jobs report tomorrow. Even with the Fed rate decrease, we still need to see inflation come down, and there's still a window for refi for some. And of course, if you have any questions about this data or buying houses, let me know.